Over the past few days, something dramatic has happened in the AI infrastructure sector. Applied Digital stock dropped sharply after news broke that Nvidia had exited its position, and that single headline triggered panic among many retail investors. But while some traders rushed to sell, analysts and institutions are actually becoming more optimistic about the company's long-term potential. Some price targets have been surprisingly aggressive, with B. Riley setting a target near $53, Roth Capital around $58, and another analyst suggesting the stock could eventually reach $99. That raises an interesting question. Is Applied Digital one of the most misunderstood companies in the AI sector right now? Because despite the recent drop, the stock is still up more than 500% from the time it was first highlighted around the $4 level. In this video, we're going to look at why some analysts believe the company still has huge upside, the catalysts that many investors might be ignoring, and the risks that could affect the story going forward. And as always, this is not financial advice, just research and analysis. So what exactly does Applied Digital do? At its core, the company focuses on building infrastructure for artificial intelligence. Instead of creating AI software or models themselves, Applied Digital builds the massive data center campuses required to run them. These facilities are designed specifically for extremely demanding AI workloads, using high-density computing hardware and advanced liquid cooling systems capable of handling massive clusters of GPUs. In simple terms, they are building what many investors now call AI factories. The long-term strategy is to become one of the key infrastructure providers for the AI industry, essentially acting as a landlord that leases computing capacity to major technology companies. Much of the company's future revolves around its Polaris Forge campuses, particularly Polaris Forge 1 and Polaris Forge 2. These are large AI infrastructure developments designed to support hyperscale AI computing. Recently, there have been several important developments connected to Polaris Forge 2. Applied Digital announced that its subsidiary APLD Compute 2 priced a $2.15 billion senior secured notes offering due in 2031. The capital from this financing will be used to fund development and construction of around 200 megawatts of critical IT load capacity at the Polaris Forge 2 campus. In simple terms, this financing helps accelerate the expansion of their AI infrastructure. Another major development came from Babcock & Wilcox, which announced a $2.4 billion power generation project intended to supply energy to Applied Digital's AI campuses. The project includes multiple large natural gas-fired boilers and turbine systems designed to produce the massive amounts of power required by modern AI data centers. Power availability is becoming one of the biggest bottlenecks in the AI industry, and securing reliable energy supply is critical for companies operating large computing campuses. Applied Digital's leadership described this project as a key step toward converting energy capacity into operational AI computing power. There is also discussion around the possibility of adding another 1.2 gigawatts of power capacity for future development. If that expansion eventually happens, Applied Digital could become one of the largest AI infrastructure providers in North America. That possibility is part of the reason analysts remain optimistic about the company despite recent volatility in the stock price. Another important part of the story involves the company's contract pipeline. Currently, Applied Digital has roughly $16 billion worth of contracted revenue tied to long-term infrastructure leases. Much of that pipeline is connected to major customers that require massive computing power for AI workloads. One of the most important of those partners is CoreWeave, a rapidly growing AI cloud company that provides high-performance computing services. CoreWeave represents a large portion of the company's expected future revenue, which has created debate among investors. Some see this as a risk because of customer concentration, while others see it as proof that large AI companies are willing to commit long-term contracts to Applied Digital's infrastructure. There was also an interesting development tied to regulatory filings related to the company's recent debt offering. Documents revealed the identity of a major tenant connected to Polaris Forge 2, and that company is Oracle. This confirmed speculation among investors that Applied Digital had secured a hyperscale partner of significant credibility. Partnerships with major technology companies like Oracle help strengthen the company's strategy of building large AI infrastructure campuses designed for enterprise and hyperscale customers. According to TipRank's data, about 10 Wall Street analysts currently cover Applied Digital stock. The average price target sits around $52, with the highest forecast reaching roughly $99 per share. If those projections prove accurate, that would represent substantial upside from current levels. Of course, analyst targets are not guarantees, but they do show that many professional investors still see significant long-term potential in the company's infrastructure strategy. The biggest headline that recently affected the stock was Nvidia selling its entire stake in Applied Digital, which was worth roughly $182 million. Nvidia's involvement in any company tends to draw attention because the company plays such a central role in the AI ecosystem. When Nvidia invests in a company, markets often interpret that as a strong endorsement. When it sells, the opposite reaction can occur. But there are several possible explanations for the sale. Nvidia originally invested in Applied Digital when the stock was trading at much lower levels, so the company may have simply been taking profits. Nvidia has also reallocated capital into other investments, including a major position in Intel that has performed strongly. Another factor investors have been discussing involves CoreWeave. Because Applied Digital depends heavily on CoreWeave contracts, concerns about CoreWeave's financial structure and rapid expansion have influenced investor sentiment toward APLD. However, CoreWeave recently announced a partnership with Perplexity to support new AI services using its infrastructure. Deals like this reinforce demand for high-performance AI computing clusters. That demand ultimately supports the need for large-scale infrastructure providers like Applied Digital. So when you look at the full picture, Applied Digital is attempting to build a massive network of AI infrastructure campuses designed to support the next generation of AI computing. The company already has billions of dollars in contracted revenue, partnerships forming with major technology companies, and significant infrastructure development underway. At the same time, there are real risks, including heavy capital spending requirements, customer concentration, and market volatility. The biggest question many investors are debating right now is whether the market overreacted to Nvidia selling its stake or whether the recent drop reflects deeper concerns about the company's future. Some believe the AI infrastructure opportunity is still in its early stages, and companies building the physical backbone of AI could become extremely valuable over time. Others remain cautious because the industry requires enormous capital investment. So I'm curious what you think. Are you buying Applied Digital right now, holding your position, or avoiding the stock entirely? Let me know in the comments. And if you enjoy deep dives into emerging AI infrastructure companies and undervalued tech stocks, make sure to like the video and subscribe for more research like this. Thanks for watching, and I'll see you in the next one.